let's talk about some ways you can trade this using pure price action. All right. Some of my traders, I had one guy in the last 2 weeks, he went 7 for 7. 7 for 7 last week. He had an excellent week. He was selling here. He sold here. On the close of this candle, he sold here, and he sold here. He caught 4 of these. He caught 3 on the euro, went 7 for 7, and he just crushed it. He absolutely crushed it. I wasn't trading on the daily time frames. I was actually watching the 4 hour, looking for my cues on the 1 hour. And let me show you what I was seeing on the 4 hour. Okay, so here the market's starting its move. And for those of you that I've talked about, well, if you miss a trend, the most common thing for traders to do when they miss the initial point of the trend is to trade on breaks. And that's fine. There's nothing wrong with trading on breaks as long as you do it intelligently. But you got to also understand, trends do not go in straight lines. They inhale, they exhale, they have to pull back. And one of the most common places that they will pull back is to the 20 EMA. And that's generally because institutional traders, they know that the market isn't going to go in a straight line. They know that this just doesn't happen that often. So what do? They look for ways to get it on the pullback. Why? Because they can get it on the cheap. If you were shorting way back here, would you be trading breakouts at this point? No, you already caught the trend. You're already making money in it. You're going to wait for pullbacks to either add on your position or start a whole new position for that matter. And you understand that the market will pull back. So people who are chasing the trend, who have missed out in it, they see this thing's falling and they're saying, oh my gosh, I got to get in this here. They generally don't, the mistake is they don't look for pullbacks. They look for trading on breaks. And that's fine. You can do it if you do it intelligently. But if you're not, then wait for the pullbacks. Even though in the daily time frame, it looks like it went in a straight line, the bottom line is on a lower time frame, on a 4 hour, 1 hour, you will get those pullbacks. Even if you miss the breakouts, don't worry, you're going to get another chance to get into it. So there's some great setups on this one here. Nice little pullback here, pullback to the 20 MA here, nice little pin bar rejection off of it. This is some great setups right here. All rejections off the 20 MA, which acts as dynamic resistance all the way down, offering you chances to get back in the market. I mean, I don't know how many opportunities you need here. 1, 2, 3, all at the same level. All at the same level and all at a roll reversal level. The market finds a floor. Once it breaks out of it, treats it as resistance, pulls down, makes a swing low, again, treats it as resistance, giving you tons of opportunities to get into these trends. So I watched it on the 4 hour and then I said, okay, I'm looking for my opportunities on the 1 hour because this is just incredibly consistent here. So let me show you a few of the trades that I was looking and why I recently just reversed it. I did 2 little reversals on it. And so let's talk about this here. Now, one thing to note is that when the market is in a strong trend and it makes a strong move in that trend, when the market starts to find a pretty solid bottom, you want to mark that level because it either represents that there are a fair amount of buyers there that are trying to stop this trend, or maybe there's some strong profit taking in there because maybe the sellers sense they can see some of the orders that are there and they're saying, okay, let's take a profit ahead of some of those orders. It doesn't really matter why. When the market forms a very strong bottom after a very strong trending move, mark that level. So just mark it and say, okay, hold on a second here. There we go. When you see that, we see a nice little strong bottom here, even a pin bar rejection here. We see that, we mark that level. Why? Because when the market does break it, you want to look for a with trend setup on a breakout retest. Now, there are going to be times where the breakout of that level will come back in a very short period of time. And that can often provide a good setup. But if you miss that, that's okay. Because oftentimes the market will give you another. Wait for a better entry. Don't worry about missing a trade. There's going to be another that's going to come down the line. If the trend is really strong, there'll be plenty of breakout retests. So I was looking for a breakout here. Actually, one of my traders, an aggressive trader, took this little buy here, did very nice. For me, it's a little aggressive, but it was a nice pin bar, acted as a trap. Obviously, there were some sellers selling on the break. If there wasn't sellers on the break, we would have never printed here. So there were some sellers on the break, but they got trapped. Basic pullback right here to the same level and did a nice little play. Me, when I see strong trends, I'm just looking for with trend setups. You know, on the daily chart, this thing was selling off 13 out of 14 candles. Why would I be looking to trade counter trend in the face of all that? I'm going to keep trading with trend until I see plenty of buildup showing counter trend trades are setting up at this point. And I'll talk about what I was seeing in that. But very simple. I didn't catch this breakout, but I knew I'm going to get my chance. And so after I see a nice little swing low with a nice little pin bar trigger, I say, okay, I'm going to wait for a little pullback to the level, and there you go, you get it. There's two ways you can trade these little breakout retests. You can either take the level, which is one option, and sometimes that's a totally acceptable level. I prefer to take the level if it happens pretty quickly. In other words, it breaks out and it comes back quickly. But if it's been a while, I don't know if the market is going to be respecting that in the same way. So I'd rather wait for a trigger off that level, a price action trigger, pin bar, outside bar, engulfing bar, piercing pattern, something that is communicating to me the live price action is respecting off of it and there are new sellers willing to enter off that level. This is one good trigger. Here's another one, nice little piercing pattern, or in this case, dark cloud cover. So here's another little option there. Very, very simple, but plenty of opportunities to get in on this level here. If you miss that one, no big deal. It gave you another one, and it gives you now an engulfing pattern, and then it even gives you one more pin bar rejection off the same level. So very simple. Look for these breakout retests. I took one of these here, and then I waited for the market to break down here. Very simple trade. I think I caught about 42, maybe 43 pips on this one here. But I will note, hey, we're forming a decent bottom here. Well, the trend is relatively stable, and notice how the bottoms are stable. With the bottoms stable like that, even though this one is a little bit lower here, when you have stable bottoms and stable tops in a trending environment, what does that usually mean? Alex M says trend reversal. Dave says consolidation. Fernando says impending reversal. Range bound with view to breakout. Liquidation, ranging, sideways. No. Okay, let's see. The closest one, and that's because he's in my course, Al, range bound with view to a breakout. That would probably be the closest. If you have a trend, and at the bottom of that trend, the market is forming a stable range, that consolidation, the fact that it's stable, communicates to me there's a likely trend continuation. Why is that? Well, it's very simple. In a trend, trends only happen because of an imbalance. Okay? So in this case, the sellers and the sell orders are much more dominant than the buy orders. So there's an imbalance between the buyers and the sellers in this case. Only until I see a massive counter imbalance to the upside will things really communicate to me, or a building of that, will things start to communicate to me that, okay, this is likely going to reverse. What am I seeing here? I'm seeing stability on the top sides and the bottom side. So that means there's a balance between the buyers and sellers. Yes, this does mean range bound, but what it eventually means is trend continuation, because the buyers are not coming in with any sort of force that's being outdone, or that the sellers are coming with a certain force, but the buyers are not outdoing them. They're just playing ping and pong with each other, and the things going back and forth. That's just a redistribution. It's a repositioning. And the bottom line is that since the sellers were in control leading up to this, there's a very high probability that the market will continue pushing on because they were the last to have control, and so they're going to try and keep maintaining control. The buyers, if they wanted to make a stronger statement, would make continually higher lows and higher highs. But they weren't making that. They're making stable highs while the sellers are printing stable lows. So since the sellers were the last ones that have been dominant, and they've been dominant all this time, it means range bound with likely breakout and trend continuation at this point, because we've seen no upset of the balance at this point.